Good morning and Happy New Year to every single one of you, as we are going to be taking a fresh look at the JPUSD for the new year. So, the first thing we are going to be doing on the JPUSD is to take an holistic view of what has happened during the course of last year, after which we are going to be using the technical parameters we have here to determine our trading opportunity for the new week. Now, looking at what we have here on the daily time frame, the first thing we observe is the fact that price action has been on a bearish momentum since the beginning of last year, as we saw how price consistently formed lower lows and lower highs. And when we connect the series of lower highs here, we had that resultant bearish trend line, which has been guiding bearish momentum till somewhere around the month of November, where we finally witnessed the breakout of that trend line to further emphasize some certain strength in the level of bullish momentum at this point in time. Now, if we look at the structure closely besides the bearish trend line, I have two key levels here, which we shall be using to guide our trading activity as we start the new year. Well, the first one, which I will be claiming as the most important key level here, is the 1.200 level. And if we look to as far back as the month of June, we will notice how this level has been a major determinant of price action. So if you look at what happened here in the month of June, we saw how this level was holding by pressure at one point in time before we witnessed the breakdown of that structure during the first week of the month of July, where that level started serving as a bearish potential around that area. Then we saw another breakout of that structure with multiple buying pressure before we finally witnessed the breakdown of that structure here in the month of August. Now, when we fast forward into the month of November here, we saw our price action broke out of that structure. I think around the month of November, struck the first week of the month of December, we saw a breakout of the 1.2 level. And since then, price action has remained right above that structure. And one important thing about that structure is the fact that that same level also shares a confluence with this bullish trend line that was able to identify here a bullish trend line which has been holding by pressure since the later part of the month of September. And with buy pressure sitting right above the 1.20 level here, it is a very good signal that we might be having a bullish momentum as we head into the new year and as well the new week. For me, at this point in time, I would like to scale down to a much lower time frame, like the 4 hours time frame, where I want us to look at how participants in this market has been relating with the 1.200 level throughout the course of the month of December in order to understand what is going on there so that we can make a decision for the week. So, in order to have a better perspective into what has really been going on around the 1.200 level, it's very important that we scale down to a much lower time frame where we begin to see things more clearly. But before I go into the details on what my expectations are on the 4 hours time frame, I would like us to look at the economic calendar as I was able to spool out some macroeconomic event that will definitely have a major impact on price movement for this week. And when I brought out my economic calendar, we have an event coming up on Wednesday. That is the ISM Manufacturing PMI, and we also have the FOMC meeting also coming up on that same day. Then on Thursday, we have the ADP employment change, which is also a high impact event. And there is a tendency that there is a consensus that seems positive at this point in time at around the 134K compared to the previous month, which gave us around the 127. So we are going to be looking forward to see how participants in this market will also be reacting to this event. Then on Friday, we have the almighty non-farm payroll. That is the first non-farm payroll for this year. And if you look at what we have here, the previous month states that we have around 263,000 job opportunities. And consensus, the figure for the consensus is quite very low, which is not promising for the dollar. So we are going to be anticipating this event, and obviously we know that as participants in this market will definitely be anticipating this event, and we shall be seeing the traces of this anticipation on the chart in the form of price action. So we are going to be looking forward to all this event for this week, and we all agree that we have major events that will be bringing liquidity into the market to drive price action. So going back into the chart here and scaling down to the 4 hours time frame, I was able to identify a simple setup here, which we shall be using to guide our trading activities for the week. Well, if we take an holistic view of what is happening here, which I was able to identify on the daily time frame, we can see that price action has been on the bullish momentum since the later part of the month of September, and as a result of this, I was able to connect the series of higher lows here to give us that bullish trend line that you can see on your screen right now. And if we zoom into what has been happening here in the last 1 month, we will notice that selling pressure began at around the 1.24500 level, somewhere around here. We saw something that looks like a double top structure during the second week of the month of December, which sent price crashing down to collapse back into the bullish trend line that we identified earlier. And one thing about this structure is this. I would like to zoom in so that we can see things more clearly here. Well, the first thing I want to call our attention to is the 1.2100 level, which I identified on the daily time frame, which I said is going to be our yardstick for trading activities for the week. That is the 1.21 level. And one thing we saw um, during the last week of the month of December was the fact that as soon as price got into the 1.2020 level, we saw how buyers tried as much as possible to negate all selling momentum. So every attempt by the sellers to break down the 1.20200 level has been met with strong resistance from the buyers. And from the look of things here, I'm having and looking at it from a technical standpoint, I want to be seeing this current structure around here as a reversal pattern, probably in the form of a triple bottom structure, as we saw following the impulsive move to the downside. We saw some rejection of that 1.2020 level, giving us a clue of strength in buying power around that area. And whenever we have a reversal pattern like this, the next thing we want to be doing is to identify a neckline area which we shall be using to guide our trading activity going forward. And in this regard, the 1.21 level, which was the major key level we identified on the daily time frame, is going to be our yardstick for trading activity, which is also serving as the neckline of this pattern. So, if we are going to be trading this, we are going to be looking at our price action will be relating to the 1.21 level to decide if we are going to be buying the GBP USD. And whenever we have a neckline of a reversal pattern like this, we expect that price will break out of the neckline area, followed by buying pressure right above that structure to give us an opportunity to join the rally to the upside. So that is one scenario we shall be looking forward to during the new week. And then the other possible situation that might likely happen at this point is if price breaks down the 1.20200 level, followed by selling pressure below that structure, then at this point we want to be thinking of selling the GBP USD. So these are my scenarios that I will be looking forward to going into the new week. But be rest assured that I will be jumping right in the comment section of this video on my TradingView platform to give you an update on what my expectation is going to be like after monitoring price action around the 1.21 level during the early hours of the week. I hope this video has been of immense help in making your personal decision on the GPUSD for this week. And if it did, kindly support this project by clicking the like button. You would also want to follow me on my TradingView platform at Darksherry, spelled DARCSHERRY, so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. Thank you for watching this video, and once again, I wish you a happy new year. Do have a wonderful evening. Bye bye.